What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the London session trading opportunities on EURUSD. So we can see our levels of liquidity marked out by our Liquidity Tracking Indicator. If you want access to that, there is a link in the description below. I highly recommend it. We can see that the Asia session has taken yesterday's high, which was also the New York PM session high. Asia has come up and is now pulling back in the range. So we can mark this as a failure to displace or a failed breakout, or whatever you want to call it. We pulled up, we are pulling back in the range. Because we're back inside the New York PM session range, the expectation would be to at least start taking some liquidity inside that range. Specifically looking at your draw on liquidity being the PM session low. We have got a sell side liquidity here, which is this wick that was put in the PM session, and so we had a gap down and then price has pulled back up, so that is a suspect low as well in my opinion, and a potential target. On the 15-minute chart, which we're on now, we can see these relative 15-minute fair value gaps. The uppermost fair value gap, which is nice to see, was respected at the 50% level, so that's a really good sign for a bearish price move. We were unable to break above the 50% level and price pulled back down. We can see this one, this bullish fair value gap, price is closing through the 50% level. So this shows me weakness in this 15-minute fair value gap, so I would not expect this to hold as strongly as the bearish one. So this does give me again of a bearish bias coming into this session. So on the 1 minute we can see, to support our bearish bias, there's lots of 1 minute fair value gaps as well. Price is obviously running down very strongly at the moment, and we can see that it's closing through this 15-minute fair value gap. So let's jump straight into the London Open now. 2 AM candle, see what happens. So big injection of volume here, still inside the range, however, bit of a pullback. So this here is our New York PM session high that we want to be keeping an eye on. This is telling us that we are in the New York PM session range at the moment. Relative equal highs here on the 1 minute chart at the open of the London session. We've built some liquidity here. We've just swept it in a big engulfing candle to come down. Relative equal lows here. We've got a break of structure now. This was the low, so we have broken structure coming back down. Do we leave a fair value gap? So we do, so there is a break of structure with a fair value gap. I wouldn't want us to be taking this short into this 15-minute fair value gap. I'd like to see price closing through that before I start jumping into any short positions, eyeing the liquidity below us. That fair value gap has got tabbed, and a strong impulsive move down. Closing below the 50% again, breaking this swing low now as well. Let's just monitor the 50% of this fair value gap. It's quite a large fair value gap. See if that gets respected for a short trade to take out our levels of sell side. So we've got Asia low below us, which is this first green line. We have the New York PM session low and that swing low as well that we highlighted. Price has not tapped that fair value gap yet. It's left another fair value gap. Come in, respected this fair value gap. If you're very aggressive, you could take a short position here. Stop loss above the first candle that created this fair value gap. So fair value gaps require 3 candles. Candle 1, candle 2, candle 3. Fair value gap is appearing in between candle 3 and candle 1. You can see that this bullish candle wicked into the fair value gap and has pulled away. So there's a potential at the break of this candle low to take a short position. If the fair value gap's going to hold, then candle 1 should hold price down. Very aggressive entry if you were going to do that. Let's see. So again, that fair value gap has held. We've got an engulfing candle now of these 2 bullish candles. We are in the trade. because we've broken the low. With my trading strategy, let's get this correct. I would be risk-free at 1-to-1. So I would take 50% of my trade off at 1-to-1, making it a risk-free trade. So we've not taken the Asia low yet. Pulling back a little bit. Fair value gap tapped again. And so one nice thing of Confluence is we've got this 15-minute larger fair value gap that has been closed through. This could now be an inversion fair value gap. So hopefully this acts as a level of resistance now, repelling price down. So not only have we got our fair value gap, which we could potentially have entered from, we've also got the 15-minute fair value gap backing up this thesis. So we're unable to break back inside the 15-minute fair value gap, which is a good sign. Strong reaction here. So this reaction is coming in at the open of the new 15-minute candle. So we're now at 245. So that's a nice level of Confluence. Again, if you want to go back and reference some Stacey Burke material, you'll see that the 15-minute cycles play a prominent part in his strategy. Seeing a big engulfing candle at the open of a 15-minute candle is always a good sign. Price comes down, takes our Asia liquidity, and takes us risk-free. So we've just tapped the Asia low now. We would hopefully be looking to run this to take out that sell side, which was put in the New York PM session just before the new day opened up. Price is driving away nicely. So again, you can see the volume coming in this 15-minute open of this 15-minute candle. So we're risk-free, so we can leave this to run. And we've just take profit there. So that's just tapped the sell side liquidity, giving us a 3.7 R trade. You could leave a portion of this on to take out the New York PM session low if you were so inclined, for a 4.8 R. Let's see what happens here. I would be happy to close out there. I mean, you can't really grumble at 3.7 R. So strong pullback. We've not broken structure yet. Not quite back at entry, but you would have been quite worried if you hadn't taken profits here. Nice big fair value gap. So again, let's monitor the 50% of these larger fair value gaps, see if it gets respected. Was pulled away nicely. Another big fair value gap. Again, let's monitor the 50%. Taken that low now officially. So we have come back, taken the low. We could be targeting this if you really wanted to go for the extreme take profit. Because we've taken liquidity here, a 2022 model entry is now on the cards. So we could be looking for a potential reversal at this point. So we've closed through the 50% of this fair value gap. Let's see what happens on the next candle. Yep, still above the 50%, and we've wicked through the top of it. So I would take this one off now. This doesn't look like it's a particularly strong candle. We are leaving bullish fair value gaps. Let's see what happens on this one. Our break of structures up here. So if we were looking for a 2022 entry, we would want displacement through this level. So no displacement there. We've left a big volume imbalance actually coming back down again, so that's quite bearish. Let's look at the 50% of this fair value gap. It's a good habit, I think, to always draw out the 50% of fair value gaps. I think it's a really good indication of how well they're going to hold. The top of this fair value gap has held nicely with a really good strong engulfing candle reaction. Big bearish fair value gap. Now that's closed at exactly 50%. So that is very interesting. We'll see if we now continue to close through or if we respect the 50% and pull back outside the fair value gap. We've closed through, we've respected the 50% more or less. We've wicked through, but we have pulled back up there. We're getting ready to close out of it. So it's still showing that this fair value gap is holding. Yet again, 50% has held. We have wicked into this fair value gap now. Okay, so we've closed through. Respecting the 50% of that one at the moment. Still respecting the 50% of this fair value gap, so I wouldn't be looking to go long at this point. Our break of structure is still up here. So we've closed through this fair value gap, potentially flipped it as an inversion fair value gap now, so we'll leave it on the charts. Okay, so we've got strong candle coming up, breaking structure. We've got this larger fair value gap, and we're going to close through this. Respecting the 50% of that fair value gap, we have left one here. Oh. Closing through the 50%, so interesting. And back down. So what we've got here is we do have a breaker block. This bullish candle is the last bullish candle before we took the low. So this would be our breaker block. We can see now price has pulled out of the breaker block. It's respecting the top of the breaker block, closing through this fair value gap. And we've got a fair value gap inside this rather large breaker block. We could refine the breaker block down to this uppermost candle. So we've well and truly broken structure. We're leaving fair value gaps up now. So there's a potential here that this is a full scale reversal. Have a look on the 2 minute, see what it looks like. We can get rid of these. We've got a 2 minute fair value gap there. This would be the 2 minute breaker block. If we've broken price, which we have. So on the 2 minute chart, didn't really get an entry on the 1. Let's just see if we can figure something out on the 2. Fair value gap inside a breaker block. We have a order block below us as well, displacing above a break of structure, which was this swing high here. The potential entry now, this breaker block should hold us, so we could put the stop loss below these fair value gaps for a 3.2 pip stop loss. 3.2 to get risk free, which still takes us into this 15 minute fair value gap, so there's not too high to go. Let's see how this plans out on a 2 minute chart now. Because we had too much of a mess in there on the 1 minute, we can go up a time frame and see how this reacts. Wow, strong. Not going to tag us in, it's just running away. So back at the top of the Asia range now, there's no opportunity to get long in there in my opinion. So unfortunately we would miss out on that. So you would get the scalp down to the liquidity that we highlighted down here for a 3.7. No opportunity from what I can see to get into a long position here. Go back to the 1 minute. Yeah, I wouldn't want to be going long at this point. I mean, there was no pullback and you had these fair value gaps. So that wouldn't have been a high probability long position for me. And we've taken the session high. Price is just continuing now. So we can see that we've taken the session high. We've come back, we've retested the session high here. Swept some equal lows, so we've got relative equal lows, big engulfing candle, breaking structure, bit displacement. You were really risky and you had your eyes on the session high now, or the daily high, given the fact that you'd swept some liquidity from the previous day's New York PM session. Do you take a continuation trade based on the fact that we're closing outside of the range? Stop loss below that low. We'll tap you in. Only just. Let's zoom in. Targeting the 15-minute fair value gap. So risk-free at 1-to-1. Well, let's just get that correct first. Make sure we'll get a risk-free trade here. Yeah, so 50% of the trade is taken off at 1-to-1, making us risk-free. So if the stop loss hits, we would only lose 50%, but we've already taken 50% as a take profit. So the 50% take profit that we've taken cancels out the 50% loss, making this a net zero trade. So we are now risk-free. Ultimately targeting session highs or closing out these equal highs at the 50% of this fair value gap. That's probably more likely where I would be closing out, 2-to-1. Whoa, we haven't got it. Respected the bottom of the fair value gap. Just about to close out of the session now. There we go. So we've got 2-to-1. You could potentially be holding for a final take profit, leaving a runner for wherever you want, to be honest with you. Price has been so bullish. This could run all day. We do take the daily high at 512, leaving a 3R. So there we go. We've got a potential trade for a 3.7 as a short position, and then 3.1 as a long position. So two nice trades there. This one, a continuation trade down to taking our liquidity that we had already highlighted, and this one a continuation trade, expecting the opposing daily high to be taken after we'd swept liquidity in the New York PM session. So interesting price action. A couple of really nice trades there. And some nice analysis, I think, to try and ascertain what was going on. Shame we couldn't find an entry lower down in this to take all of this run, but it doesn't happen all the time. But here's two really good examples of kind of coming in later on in the move and still being able to find valid setups. So I hope that was useful, guys. If it was, please leave a thumbs up. If you've got any questions, please leave them down in the comments below. And if you're enjoying the content and want to see more videos like this, then consider subscribing. I'm releasing new videos every day. Alright, thanks very much. I'll see you in the next video.